or open for rate hikes into the future, the markets have actually priced in or pushed further out into the future a rate hike. And it's really going to be interesting as we get into the beginning of next week. This number here this morning, this is now a 39.9. This was a 40.3. So it was a 40.3. And so the rate hike has been pushed out another month into 2027. And the comments that Kashkari was making earlier this week was that he was concerned about inflation expectations becoming unanchored, and meaning that businesses and just market participants who do not perceive that the Federal Reserve is going to be successful at bringing inflation down. And we've seen this before. Remember when inflation was transitory and Powell had to do these massive tightening policies in 2022. And right now, there are really two narratives that are fighting right now. And the first narrative is the AI boom and all of everything that goes along with that, and incredible productivity increases that the world is going to have with this incredible new technology. And then the second is the energy shock, which makes all of that cost more. And what narrative is true right now? The narrative that is true right now is that AI and the Mag 7 have, I think it was 57% increase in earnings. Just incredible blowout numbers. They're doing better than anyone had expected them to. And when we're going into the end of this week and into the beginning of the summertime, we have a series of long setups here that we came out of earlier this week. First, there's a traditional that we screamed away from. But what you will notice is that these are very small and very tight setups. The top and bottom of this range here we're marking as being, just where the top and the bottom of the range could develop. But earlier today, we were inside of, or I should say last night, we were inside of an extension. We were watching for the previous high, the 50%, the daily pivot, the 20 handle, this area, of about 7 points being an entry into a continuation of the trend. There was a front run of the 38.2% line. So it was even more aggressive. Essentially what they were defending is the 10 handle. We completed a profit target, and then this morning came out of that high, and our same anchor to new high extension long level was the 77.75. We went one tick into it. We dipped only one tick into our support. And then we trapped a bunch of sellers down here inside of these lows. Now, we haven't revisited that low. We returned to where we trapped sellers at highs. And this is a great example of this phenomenon. When you get a green close and the next red, that level is where, in theory, there's a group of market participants who are stuck long. And whether that is true or not, perception is reality. And market participants who perceive those stuck buyers, or someone that will have to close their long when they come back to where they had entered, you have two groups of sellers. The longs that were wrong and that are very thankful that they came back to break even. This stream continues at emoneyaddict.com. The link is in the description. Join me there for tools and resources for learning measured move trading. I wrote the book on the measured move. Check out the hundreds of others that have learned trading plan development, pattern recognition, money management, and trading discipline with me to become the best, most confident trader that you can be.